The Pareto Group's R6 billion investment in Atterbury Europe was one of the most substantial offshore investments ever by a private South African property company. This transaction was also Pareto's first offshore venture and extended the group's already impressive portfolio, which includes investments in shopping centres such as Sandton City, Menlyn, Westgate, Cresta, Tiger Valley and The Pavilion. With me is Riyaad Khan. He is a real estate investment bank Transactor at Rand Merchant Bank, who was part of the team who put this deal together. Riyaad, thank you for joining me. This is a pretty significant deal and it flew below the radar. Tell us the details.
The deal that we're looking at today actually forms the second step of a much broader transaction, which goes back as far as January 2018. We were approached by the Atterbury Europe management team to do a share buyback to allow them to exit one of their then shareholders. We provided them with a bridge loan, the proceeds of which we used to buy back shares. The intention was then to go and raise equity for Atterbury Europe to then repay that loan, and that's where Pareto comes in.
That seems very complicated, but Pareto is an interesting company. It owns significant local assets. It's owned by the government employee pension fund, which seems an unlikely partner. How did these parties meet?
RMB's got a long-standing relationship both with the Atterbury Group and the Pareto Group, and we understood that Pareto were looking to fast-track their offshore strategy. So in identifying this, we put the two parties together, which ultimately led to this investment. I think for Pareto, it was quite an attractive transaction because they bought into an existing business, which meant there was operational infrastructure that they bought into, a management team with both track record and expertise, as well as a development pipeline. Ordinarily, that would take north of 5 or 6 years to put together, so at the time made a lot of sense for them.
Of course, relationships are key, and both parties are clients of RMB. How did these parties meet?
So it was an introduction facilitated by RMB, and it was through our involvement in the first transaction being the share buyback, as well as an understanding of the strategic requirements of Pareto to put these parties together. Obviously, there needs to be a sort of cultural and operational sort of match between the parties, and thankfully there was between the key management teams.
What was the role of RMB in all of this?
So on the Pareto side, we were lead arranger in terms of a R6 billion capital raise required from a Pareto perspective. That was done through a loan syndication process, which means RMB was effectively mandated by Pareto to approach the banking market to raise capital on its behalf. The role that RMB plays in that process is to effectively act as an interface between client and the market, provide information to make sure that potential investors can make appropriate credit and pricing decisions, and then ultimately implement the transaction based on the timelines and requirements of the client.
Obviously, there are foreign currencies involved and not the mainstream dollar, euro, pound. Is that an issue?
In terms of this transaction, it was a dual currency facility. We raised both euros and rands on Pareto's balance sheet in order to facilitate this investment. Once Pareto makes those investments into those jurisdictions, there are multiple sort of currency legs there. So obviously a lot of thinking and structuring behind how we get those flows into the right jurisdictions.
But it's an interesting trend where South African property companies invest offshore. We saw a lot of transactions in from listed property companies, but now it seems to move to private companies. Is that a definitive trend?
South Africans have been pioneers in emerging Europe. There are a couple of reasons for that. I think one, there's some comfort in dealing in emerging markets, having sort of built businesses in South Africa and operated in the rest of Africa. The hard currency exposure also makes a lot of sense in terms of a rand hedge, and I think the track record that some of these South Africans have built in those spaces makes it easier for new South African companies to enter those markets. The listed sector, as you mentioned, have been doing it for a number of years, but now we're seeing high net worth individuals and private property investment companies doing the same.
Atterbury Europe has investments in Serbia, Romania and Cyprus. It's very Eastern European focused. Is that a key growth area?
Absolutely. So if you take a closer look at those economies, they've got some